Welcome to the second part of this video, where we'll dive deeper into why more than 70% of individual investors fail to meet their financial goals in real estate within the first few years. In our first video, we looked at some foundational reasons behind these struggles, and today we'll go further into the common pitfalls that cause so many investors to lose money or miss their targets. Here, a quick recap of common mistakes covered in Part 1. 1. Avoid emotional decisions. Always base your decisions on solid data, not feelings or gut reactions. 2. Understand the full cost. The purchase price is just the beginning. Make sure to account for additional and hidden costs in each transaction. 3. Plan for wear and tear. Even if you're not renting out the property, regular maintenance is a must. And if you are renting, expect wear and tear to accelerate and budget accordingly. What we'll cover in this second part of the video: agent commissions, insurance, unexpected costs and vacancy expenses, exit strategy. Make sure to stick around until the end to discover the most significant blunder that beginners often commit when purchasing a property. And don't forget to subscribe to my channel for more valuable videos and content designed to enhance your performance in the real estate sector. So let's start with the first big question. Why do so many beginner investors underestimate the value of real estate agents? Many beginner investors underestimate the value of real estate agents, seeing their fees as an unnecessary expense. Agents, commissions, costs on every transaction. Whether you're buying, renting, or selling, there are agents' commissions to consider. These commissions add up, and many investors fail to incorporate them into their financial models. Buying. Real estate agents typically take a percentage of the sale price when purchasing a property, often between 2% and 6%, depending on the market. Renting. If you're using a property management company or real estate agents to find tenants, this could cost between 8% and 12% of the rent for long-term rentals. For short-term rentals, platforms like Airbnb, Booking.com, or VRBO also take their share. Airbnb, for example, charges around 3 to 5% in host fees, and Booking.com takes up to 15 to 20% commission on every booking. Selling. When it's time to exit your investment, real estate agents will again claim a commission, typically 5 to 6% of the sale price. For high-value properties, this can represent a substantial amount of money. Each of these commissions erodes your profitability and needs to be considered in the long-term financial planning for your investment. Essential yet often underestimated. Every real estate investor knows they need insurance, but many fail to appreciate how much it can cost, especially in high-risk areas. If you're in a flood zone or hurricane-prone region, you may need additional policies for flood insurance or hurricane coverage. Unexpected repairs, the silent profit killer. If you are planning to rent, it's crucial to understand that even if you include clauses in your lease agreement that place maintenance responsibilities on the tenant, the reality can be quite different. Tenant protection laws vary by jurisdiction, and a tenant's refusal to pay for maintenance can complicate matters. In some cases, if a tenant feels that necessary repairs are not being addressed, they may gain the right to withhold rent payments altogether. Vacancy and turnover costs when renting. Rental properties do not maintain full occupancy year-round. Inevitably, there will be periods when the property is vacant and not generating income. A common misstep among investors is calculating profits based solely on the assumption of full occupancy, overlooking the reality of vacancy rates. It's crucial to realistically factor in these vacancy periods and maintenance needs when assessing your rental income potential. Many investors mistakenly assume 100% occupancy, particularly when targeting a rental strategy. Instead, Incorporating an average vacancy rate into your financial calculations provides a more accurate picture of expected cash flow and profitability. Short-term rentals have gained tremendous popularity through platforms like Airbnb, Booking.com, and VRBO. However, it's important to note that these platforms charge commission fees, which can accumulate quickly, often exceeding expectations. Depending on the platform, these service fees can range from 3% to 25% of your rental income. If you are planning to purchase a property, rent it out for a few years, and then resell it, this can be a savvy investment strategy, especially when considering factors like mortgage repayment and current inflation rates. However, it's essential to keep in mind the commission structures of various rental platforms when pricing your property for both renting and resale. While these commissions may seem minor initially, they can have a substantial impact on your overall profitability as your rental frequency increases. For those managing a high-volume short-term rental business, a significant portion of gross income can be consumed by these fees over time. And when the time comes to sell your property, you will once again need to account for agents' commissions. In most cases, real estate agents will take 4 to 6% of the final sale price. For an investor selling a property worth $500,000, that means paying around $25,000 to $30,000 to the agent. This fee is often overlooked in the excitement of selling at a profit, but it is a crucial part of the final cost calculation. Lack of a clear exit strategy. Why an exit strategy is essential. A well-defined exit strategy helps inform your purchasing decisions, including the type of property you buy, the location, and the renovations or improvements you might undertake. By understanding your end goal, you can make choices that align with that vision. Knowing your exit plan allows you to anticipate your cash flow needs, tax implications, and potential capital gains. It helps you prepare financially for both the short-term operating costs and the long-term goals associated with selling or refinancing. The real estate market is inherently volatile, and property values can fluctuate due to various factors, including economic changes and local market dynamics. Having an exit strategy provides a roadmap to navigate these uncertainties, allowing you to make informed decisions during market downturns or unexpected challenges. Real estate can be one of the best ways to grow your wealth, but it can also come with its fair share of headaches that can trip up even the most eager investors. By keeping an eye out for the common mistakes we've discussed, you'll be in a much better position to strategize and make smarter moves. With the right know-how and a little preparation, you'll navigate the real estate scene like a pro. If you have any questions or need a little more guidance, don't hesitate to reach out. Check the link in the comments for a free consultation. I'm here to help you succeed in your real estate journey.